Mark Yagi, welcome to another weekly market pulse. Today is May 9th, and it's the second week of green. So hopefully you are in the market and enjoying some of these green days that we're having, and hopefully your stocks are all going up. They don't all go up, but the tendency is that most of them go up when we have a green. That's why I spend so much time talking about market timing and teaching my students in our courses about why it's important to have market timing as part of your game, even if it's just something for your brain to like wrap its head around that the markets are going up. But anyway, the bottom line is we are green. Let me share a couple of things with you. Here we go. All right, so we just got off our mastermind call and discussed with the gang some of the cool stuff that's going on in the market. You can see we have four green lights. That basically means punch that accelerator because we are moving higher. And you can see we went green here right around April 28th, and that was at 18,000. I don't know, right around 18,900, and now we're at 19,351. So not a huge move up. It's just been a kind of a measured move up, and it's getting along a little bit long in the tooth. These moves don't last that long before they make a slight correction, but sometimes they do last a long time. The average one is about, I don't know, 15 to 18 days on the green side. All right, let's keep going here. Let's take a look. This is the NASDAQ, and you can see there's a double bottom pattern that I've identified here with a breakout spot at 18,281. Now, it's trying to get to that 18,281, but it's having a little trouble. Like the volume, look at the volume down here. It's really low. And when volume is low, that means there's not conviction on whatever the move is. So we want to see a little bit more volume moving up into that 18,281. I have a feeling it's a resistance level because the 200-day moving average is right there, that little black line. That's there too. There's a lot of resistance. It's got a lot of work to do to get above, and it could happen with a China announcement. It could happen, with some other good news. But right now, I don't see a lot of impetus to take us that much higher. We got to repair all this work that we've had to the downside over the last couple months. Now, if I'm going to show you the next three charts of the big indexes, and they're going to look almost the exact same way. Notice how they're above the 50-day moving average. That's really important. That's the first step for us getting out of this funk that I still think we're kind of in, but at least we are over the 50 to get out of the funk if we're bullish. All right. Notice how this is kind of the same. Over the 50, kind of a little double bottom pattern shaping up below the 200. And then we have the Dow Jones over the 250, close to the 200, coming off a double bottom pattern. The New York Stock Exchange, double bottom pattern right at the 200-day moving average. So this is the healthiest one, has been for quite some time. So keep an eye on the New York, maybe to pull everybody up with it. And we got a lot of work to do on technology. So I don't see it all coming back with a vengeance. Maybe it'll chug back up, but we'll see. I'm not trying to predict. I'm trying to play the probabilities. That's why I read charts, because I have no idea if the stock's going up, down, or sideways. I just try to say there's a probability of it moving in that direction. Speaking of probabilities, here's the VIX, the volatility index. You could see it spiked a few weeks ago up to 60, and now it just kind of drained all the way back to its mean, and it's now below the 50-day moving average. That means the panic is kind of come out of the market, and we're back between the 50 and the 200. Still a little high, but not like spiking high. Nothing to panic about there. Apple, really lousy charts. I've been talking about not being in this one unless you're selling calls, which is what I teach people how to do. But if you're going to sell calls, sell in the money. So I'm in the money and I'm making good money on Apple and protecting the downside. I'm not trying to predict which way that it's going to go. Although to me, this stock looks like it's not good, right? So I don't see any positivity coming out of Apple, even though I know it's a great company. Blah blah blah. I mean, we can tell all the stories that we want, but the real story is here on the stock chart, okay? So that's Apple. Nvidia, same kind of stock chart, just kind of trending down, bouncing, trending down, bouncing, trending down, bouncing. But if you look at it, it's a downtrend. Death cross with the 50-day happening down through the 200-day moving average, the red through the black line there. We love Nvidia. Like, I love Nvidia too, but the stock is different than the stock price, right? The company is different than the stock price. So, but look at the difference. Here's Palantir. This is a beautiful little cup that's shaping up. It's on the right side of the cup. We'd like to see some good volume coming up through that, and we did through earnings. Palantir is looking strong to me, and it has been for a while. Now, on the way down, I told you guys this was getting long in the tooth. Don't be buying it up here. I'm not saying that anymore. I'm saying now it's turned around. It's gotten rid of some of the sellers. It made a little double bottom. It's now coming up the right side of a cup pattern. I've been talking about this for about 3 weeks, saying you should be buying Palantir. And if you listened to me, you'd have bought it. When I bought it, it was right around 100 or maybe 97 or something like that. So I'm not saying you have to listen to me. I don't want you to listen to me. I want you to learn how to interpret things so that you can do them if I get hit by a bus. Don't follow me, just learn. This is an educational channel. And that's what I'm trying to do is spread the word here about how you can do this stuff yourself. MicroStrategy, something everybody loves right now because it's Bitcoin related. MicroStrategy right now is doing a beautiful bounce. It's like its third bounce off the 200-day moving average, and it bounced at that 285 level, and it's now over 400 bucks and performing extremely well in this market. And it has been as we've been going down. It kind of went down a little, but it didn't go down too much. Look at it, it's got a 98 relative strength. That means it's performing better than 97% of all stocks. Tesla wants to be better. It wants to be part of the MicroStrategy club, but it's got a lousy chart too. The difference is it's coming off the bottom with a little bit of strength, trying to establish that $300 mark. We'll see if it can hold that today. It needs some good volume to be able to make this a real level so that it can get some support there. And support can be beautiful if you can do it right. SoFi technology, a lot of people love this SoFi. It's a cheapo, right? I don't love cheapos because a cheapo can move, a $1 move on a $13 stock is a gigantic move. And we're not trying to hit it out of the park here. We're trying to make juice, which is what we call when you sell the time premium, when you buy a stock and buy a base position, you sell a call against it. We're income generators. That's what we want to do. We can't predict which way the stocks are going to go. AppLovin, which is the number one performing stock last year, had a gap up on earnings a couple days ago. I suspect, it had a good gap up on earnings, but it is actually, down from 525. It went way down more than half that. That would have been a lousy ride to be in. Excuse me. But now it's bouncing. It's up at 333. So if we're probably going to go and fill this gap and then maybe go higher. We'll see. Netflix, for about 3 weeks, we've been talking about Netflix breaking out at 998.70. That was the spot right there, that the top of that apex of the V. And look at it today; it's at 1138. And there's nothing holding back Netflix. People are still subscribing, and they're actually raising the prices. And when they raise the prices, Netflix goes higher. There's going to be a day where it doesn't, but right now, Netflix is on a breakout in a green market. Amazon, look at this chart. Like you can start seeing this, gang, right? Like I don't have to tell you that this is a lousy chart. Your brain says, compared to the other, look at that, right? That is a good chart. That is a not good chart, right? It's not brain surgery. Like things are moving down. There's a death cross, 50-day down through the 200, blah, blah, blah. It may bounce here, and we're not trying to pick the bottom, but right now you didn't want to be in this, right? The stock is at 192. It was at 242 a few months ago. Last one I'll do here is Alphabet. You can look at this chart and know that it's a stinky poo-poo head. It's on its way down and it's broken down through the 200. It's below the 50. It's like not a lot going on here. So if you're just hoping that Alphabet's going to come out of its funk and going to beat the antitrust stuff, you're just trying to pick the bottom. Be smart about the stocks you're in. Try to trade the momentum on the way up, and then give yourself the edge of collecting income. We call it the juice here, collecting income while you wait, whether it goes up, down, or sideways. Because, there's a lot of people that have been trying to predict Amazon and they've been saying, well, it's at the bottom and it was at 200. And then it's at the bottom, it was at 190. And then it was 180, 160, right? It hit 142. That's, huge move. 30% move off the top. All right. There's a lot of good news out there, so I hope you're finding it, and I hope you're trading it and finding the opportunities out there because there's plenty of them. And then if you're inclined to get the juice, then sell covered calls. Learn how to do that properly because whether the stock goes up or down, you could still make the income. It's kind of like owning a house. You buy it, and then whether the house value goes up or down, you're still got a tenant in there that's paying you the rent. But anyway, I digress. Thanks for tuning into the Market Pulse. Hope this is helpful. Have a great weekend. I'll see you next time and next week. Have a great day. Take care.